So if you create this paper Bitcoin and Bitcoin goes up in price, these are big buyers coming in with millions and hundreds of millions of dollars and buying up thousands of Bitcoin per day. Yeah, I think everybody's kind of a little bit surprised what's happening in the marketplace right now. You figure with MicroStrategy, MetaPlanet, and then all the other copycat Bitcoin Treasury companies popping up and aggressively accumulating and getting long on Bitcoin, that there would be an explosion in price. We're seeing the maturation of the market cycle, and the 10-year CAGR on Bitcoin is over 80%. I don't even know the math off the top of my head. There has not been one Bitcoin bull market that has ended with the price below Bitcoin fair value.
Yeah.
Euphoria will push price above fair value, somewhere above that $320,000 mark. I have Bitcoin fair value today at $320,000. I don't mind there being paper Bitcoin with financial derivative products. I do think it would create a big catastrophic issue if there were paper Bitcoin. And I think the main concern of Bitcoiners, and rightfully so, is
interesting.
All right, guys, we are back for another Simply Bitcoin IRL, where we bring on the best Bitcoiners to explain what is going on in the world. So first off, I'm here with a very good friend, CJK. Honestly, one of my favorite Bitcoin analysts. He's a builder. He's been around for a long time. So I'm going to rip the Band-Aid off here, CJ, and just ask you what everyone is asking themselves. What is going on with the Bitcoin price? How is the price not ripping when we're seeing all of this good news around Bitcoin, whether it's institutional buys, whether it's nation states announcement? What is happening in the market right now? And the question I want to ask you personally, is 150K going to be the top of this cycle? CJ, the floor is yours.
Well, thank you so much for having me back, Opti. You know I love you, and Simply Bitcoin, you guys are the best. It's a pleasure to be here. And yeah, I think everybody's kind of a little bit surprised what's happening in the marketplace right now. You figure with MicroStrategy, MetaPlanet, and then all the other copycat Bitcoin Treasury companies popping up and aggressively accumulating and getting long on Bitcoin, that there would be an explosion in price, right? I mean, this isn't just retail coming in. These are big buyers coming in with millions and hundreds of millions of dollars and buying up thousands of Bitcoin per day, a lot more Bitcoin per day than is being earned through the block subsidy. So it's very interesting that we have demand overpowering supply, and yet prices, I can't say it's not performing. We're still the best performing asset in the world, but it is not performing at the rate and pace that we would have anticipated it to with so much buying pressure. And I feel like the answer to this really lies in the fact that only the Bitcoin treasury companies are getting long Bitcoin. All of the other institutions and market makers are laughing at the Bitcoin treasury companies, calling it the dot-com bubble. They're bewildered. They don't understand what's really going on here with Bitcoin being the apex asset. They don't understand Bitcoin as engineered money that was strategically designed to leverage the natural laws of economics to drive value into the network and to secure that value through space and time. They think of it as a risk-on tech stock. So they don't really appreciate Bitcoin for what it is. And because of that, they're getting short on Bitcoin. And they're doing it in a way that a market maker would. And what do I mean for that for people who aren't following the markets or never made markets before? What happens is you buy Bitcoin from the spot market and then you sell it in the futures market. And when you sell it in the futures market, you can begin to harvest yield. You can begin to earn yield by harvesting volatility. So the way that an options market works is that the more volatility that is in the underlying settlement asset, in this case being Bitcoin, the higher the premiums. And the higher the premiums, the more attractive it is to write calls and puts in that marketplace, because the people who are buying those calls and puts, whether they're speculating or hedging their portfolio, are paying a significantly higher premium to get that option on their balance sheet to either hedge or speculate versus other stocks that don't have that type of volatility. So I think we've seen a huge move forward in Bitcoin treasury companies aggressively accumulating, but I think a lot of that accumulation has actually been offset by futures markets, both centralized and decentralized, where Bitcoin is being sold into the marketplace in order to collect these premiums. And the premiums that Bitcoiners are willing to pay to go long are significant. And the volatility in the marketplace is the best in the world. So I think that the upside pressure is really being alleviated by the bigger institutional market makers coming in and saying, "Hey, these guys, this is just another bubble. This is just another momentum wave. Let's hop into this marketplace, not necessarily to get long on Bitcoin, but to harvest yield and to farm yield and to collect premiums from speculators and portfolio hedgers." And that's what has been offsetting the Bitcoin price. But as they learn more and more, and this goes back to our story, right? Like even you and me, Opti, like when you first get into Bitcoin, you're like, oh, I'm gonna make some money. I click buy, I click sell, and this is gonna be easy. I'm gonna be the best trader in the world. I'm gonna quit my job, set up my desk here. This is gonna be, let's go, baby. I'm gonna get rich off of this. And that's what they're thinking right now. So they're like in stage one of when we first get into Bitcoin. So I think that's the good news. The good news is that the market used to be cut off. The market used to be looked down upon and frowned upon. Now the market is actually being accepted. Now people are they're dipping their toes in the water. They're making markets. They're getting delta neutral. They're harvesting yields from the marketplace, and they're starting to understand it better and better. And this is all part of the monetization of the asset class. So Bitcoin treasury companies accumulating for the long, long run, probably to try to set themselves up as the central bank of the internet economy or digital economy. And then even sovereign nations through Bitcoin strategic reserves ramping up around the world. And just the other day, the state of Texas not only passed their strategic Bitcoin reserve bill, but also bought their first $10 million of Bitcoin. So this is accelerating pretty fast. And there's no doubt in my mind, we're witnessing the monetization of the asset class. But as the bigger institutions kind of actually have some data to work with now. It's not just laughed at. It's not just magic internet money. Now they're actually farming yield. Now they're actually harvesting profits from the marketplace. As they start taking a closer and closer look, the way you and I did, they'll end up at the bottom of the rabbit hole. Now, whether they plant some more TNT at the bottom and go deeper like we did, I don't know. But they're going to get to the bottom of the rabbit hole. And when they do, they're going to find out that Bitcoin is the apex predator. Bitcoin is engineered money. Bitcoin is actually the first form of money that humanity has. And that gives us the ability to now take that money and integrate it into our system, integrate it into the world of finance. And that's the most exciting next step. And the only parallel I have to draw to this is in 71, when they took gold off of backing the dollars, the real estate asset class became monetized. Michael Saylor refers to this as land banking. But shortly after that, we saw the financialization of the asset class. We saw mortgages, second mortgages, home equity lines of credit, all these different financial tools built up around the asset class that allow you to leverage that equity value on your balance sheet to grow and compound your wealth. And that's what really drove the massive monetary premium into the real estate asset class. Not that it was just real estate, but that it was a collateral asset. And the good news is Bitcoin is on that same path, and it's moving much faster down that path. Not only is Bitcoin digital gold, it's no longer magic internet money. It's evolved to digital gold. But not only is it digital gold, it's going to be financialized just like real estate. And when it gets financialized, it'll become common sense to these institutions and market makers that, whoa, Bitcoin is pristine collateral. It's 24/7 liquid. It has 10-minute block times and transaction finality. We get the best of gold by upgrading hardness to absolute digital scarcity, and we get the best of cash equivalents with 10-minute block times, secure transactions, and transaction finality. So this hybrid asset is now on the scene, accepted as being on the scene, so much further and so much faster than anybody can anticipate. We're only 16 years into this puppy, and the big boys are already dipping their toes in. So as much as we'd like to see the price shoot up and rip up immediately, I think this is actually really healthy to be trading at these levels. Like to have World War III almost break out the other day with Iran and what happened, and to see Bitcoin go a little bit below 100 and now up over $107,000 per Bitcoin. That shows you that this is formulating a new base. That 100,000 was not a technical resistance. It was a psychological resistance. And we're flipping that psychological resistance into psychological support. So just like right now, if someone said, hey, if Bitcoin went down to 40,000, what? That doesn't compute. What do you mean if Bitcoin went down to 40? Bitcoin's not going down to 40,000. Like it'd have to be the end of the world to get fit $40,000 Bitcoin. That's not happening. This is how it's going to be in a couple of years at 100,000. When people say, oh, it's going to go back down to 100, you're going to be like, what do you mean it's going to go back down to 100? That's not going to happen. So we're flipping a psychological resistance into a psychological support. we're seeing the maturation of the market cycle. And as we go up through these repricing and then distribution and then repricing and distribution phases, yes, it's taking a longer time, but ultimately Bitcoin gets stronger and stronger and stronger through each phase. And as we climb up that ladder, ultimately, this is what Bitcoin was designed to do. At some point in time, it'll come back down, but it'll come back down to a higher low, and we can build from a stronger foundation. So it is not as exciting because we all want to get to that euphoric stage where Bitcoin just goes and goes and goes and goes. It is coming because that's a natural. It's the human variable within the market cycle that creates the euphoria stage, not the asset class itself. So we are going to get to that euphoria cycle, but we're not there yet. I would say right now we're at that hopeful cycle. Like everybody's at that. I hope it holds 100. I hope we can hold 100. I hope it happens. And then once it's clear that's going to happen, now things are going to become more fun and things will get more aggressive. But we have to flip this psychological resistance into support. It's taken a little bit longer than we'd like to, but for me, it's just a matter of time. And when it rips, she's going to rip hard. 150, too low, way too low.
Let's go. Love to hear. All right, so many interesting rabbit holes in there with you, CJ, that I'm sure we're going to unpack moving forward. But again, there was a lot to unpack in that beginning. And, you talked about the monetization of Bitcoin. You talked about the financialization of Bitcoin. And you kind of did touch on this idea that a lot of Bitcoiners have been hitting on recently is the idea of paper Bitcoin. Now, I think they might be kind of, looking at different areas of where this paper Bitcoin is coming from. But from my perspective, I think you hit on exactly where all the paper Bitcoin is actually coming from. It's from the futures short selling. So is that where the paper Bitcoin is coming from? Because that's like the main thing I'm hearing from a lot of people making content, like someone's suppressing the price, bro. What is going on with the Bitcoin price? It should have ripped. So is that the key place where that quote unquote paper Bitcoin is coming from?
I hope so, because if it's not, we're in trouble. I mean, and it's okay for some paper Bitcoin to be created on the short side, right? Because we know Bitcoin is designed, it's engineered to go up over time. But every once in a while, especially if you're like a business, it does make sense to hedge your downside, right? So when we look at futures contracts and we think about that financial tool itself, I always like to go back and use the farmer example. If you're a farmer and you're growing corn, and hey, if I sell all of my corn, I'm going to make $500,000. But if I pay $100,000 for this contract, just in case there's no floods, just in case everybody has a really good yield and the supply of corn is much higher than I anticipated at the time of harvest, well, if the price of corn goes down, I might only make like $200,000 off of this, and I need to make $300,000 to keep the farm up and running. So you know what? I don't mind paying $100,000 to hedge my downside on my $500,000 crop, because if I sell it for what I think I'm going to sell it for, I can get 400, and I only need to make 300 to keep the doors open. And then if things go down lower, my short becomes worth more and more and more. Well, he's not posting corn as collateral to create the short. When he creates the short, the fake corn is paper corn, but it does create a real liability on that person's balance sheet. So it's like Bitcoin, but without the upside. It's Bitcoin with only the downside. So I think when it comes to futures and options contracts, it does make sense to have these types of financial tools around Bitcoin. I think the main concern of Bitcoiners, and rightfully so, is where are all the Bitcoin? Like I would just like to see more proof of reserves. That's what I would like to see. Like at People's Reserve, we're working with Hoseki, and Hoseki does a couple of things. Number one, they do a lot of proof of reserves for the bigger publicly traded companies in order to prove that what a company says it has, and that's without question. Just being regulated isn't enough. Like Enron was regulated, right? The lenders during the 2008 financial crisis were regulated to a certain extent. So regulation doesn't really always solve problems. We need proofs, and that's why we love Bitcoin, right? Because it's mathematical proof. You just run the numbers, run the numbers for yourself. It's math. Math don't lie, and that's what makes proof of reserve so important. And I think at People's Reserve, if you want to use a Bitcoin powered mortgage and you want to buy $1 million home, well, if you don't have $1 million worth of Bitcoin, we're wasting our time talking and working with you. I mean, if you want an individual person who's going to give you a white glove service, you need to prove you have $1 million of Bitcoin. So you go over to Hoseki, you do a signing thing, and you show and you prove that you have that $1,000,000. I think these bigger custodians should be doing the same thing. They should be signing and showing that they actually have the Bitcoin on chain that they claim that they have in custody for some of these bigger entities that are accumulating thousands and thousands of Bitcoin. Uh, Pump's recent SPAC now has more Bitcoin than GameStop. I think they have close to like just over 4,700 Bitcoin. Well, I'd like to see the proof of reserves on that. I'm not saying that he doesn't have it. I'm just saying it does make sense that when you do these things, just have your custodian sign. Just prove that this coin is on chain, because I don't mind there being paper Bitcoin with financial derivative products. I do think it would create a big catastrophic issue if there were paper Bitcoin and the upside isn't protected, right? With like a financial product, if you're trying to short Bitcoin, you're going to the downside. The downside is the only thing that gives you any value. But with this, you lose the upside. So if you create this paper Bitcoin and Bitcoin goes up in price, the custodian's not going to be able to buy the Bitcoin. There is no upside exposure, and that could create a huge problem for the entire industry and really throw a wrench in true free market price discovery, which I think is one of the most important characteristics and attributes of Bitcoin. That we actually have a true free market price discovery based on the supply of the money and the demand for it, without having to worry about anchor rates and stated rates and different players in the marketplace trying to play games and manipulate. If you try to play with Bitcoin, it's proven you're going to lose. Eventually, you're going to lose. Anybody that's traded Bitcoin knows you're going to lose more trades than you win, and nobody can time the marketplace. So I hope that this paper Bitcoin is only an advent of financial tools for really not even speculators, but more for hedgers, and especially small and medium-sized businesses who are trying to get exposure to Bitcoin and tap into Bitcoin's engineered design, its engineered compounding annual growth rate to help grow their business. It makes sense. But if it goes beyond that, we're in trouble. And I think proof of reserves is the answer and should be the standard in the industry.
Yeah, I think you're 100% right. Now, that really does beg the question. I'm sure you saw the recent controversy around Michael Saylor and proof of reserves. What did you think about his response? I think part of it was very, logical, reasoned out. The other part, from like a Bitcoiner's perspective, you're kind of like, why don't you want to show it? The idea, like you said, of liabilities and assets that you own, that maybe that should be shown and more people should talk about that. But the second part of the response, just trusting the fiat system to audit you, bro. It's kind of like, I think this is what we're trying to get away from. So what was your thoughts on that? Obviously, I think you kind of touched on it right now, but specifically when you watched that clip, what were you thinking?
Yeah, I actually talked with Mitchell HODL right after that when we were in Vegas, and I talked to him about that, and we were super surprised by his answer. So I think before I give my answer, I should make it clear that I am a MicroStrategy stockholder. I have a split adjusted price of $27. I've been with Michael a very long time. I'm very happy with his performance. I do believe he will make MicroStrategy a central bank of the digital economy. And I have no plan on selling those shares. They're already in trust for the great grandkids. So with that out of the way, I think I can now say how I really feel about it, which is, number one, I don't think it made any sense. I think, like, to the average listener, it's like, "Oh, okay, yeah, I kind of see what he's saying." But for those of us who have studied Bitcoin technology, to say that sharing your public address is a security flaw in any form or manner, uh, then what? The elliptic curve doesn't work? You know how to break Bitcoin? Like, sharing your pub key is not going to create any risk whatsoever at all. So it's just confusing as to how that could create a type of liability or risk. And, maybe Michael knows that, and I know for a fact Michael knows that. There's probably something in the background with, like, insurances, right? Like, so he's got insurance on all of his Bitcoin. And one of the lines in the insurance, I'm just guessing here with what I've had to deal with at People's Reserve, is that, hey, if you share your public addresses, we don't, as an insurer, we don't understand the technology the way you do. And that seems like it adds more risk to
Interesting.
us. So if you want to share your public addresses, go ahead, but we're going to have to increase your premium. But if you're able to obfuscate those public addresses and use a third-party auditor, which is what we're accustomed to and what we're used to in our contract model, then we can lower that premium for you. And to Michael, I'd imagine Michael would be like, that makes no sense. Like, you know how to break Bitcoin? You don't believe in the elliptic curve? Like, what's going on here? And they're just like, look, it is what it is. You want to pay a higher premium? You're welcome to. We'll take your money, no problem. But that's the only thing I can come up with. That's the only thing I can come up with to justify the fact that you wouldn't just share the online public address and allow people to track your earnings. I mean, really what it's going to do is it's going to create attention, right? And attention is worth a lot, especially when you have a lot of copycats coming after you. Now, everybody knows Michael opened the Pandora's box of financial engineering. Even here at People's Reserve, we're building on top of his shoulders, right? He opened the Pandora's box of financial engineering for corporations and institutions, and we're building on top of his shoulders with financial engineering for the everyday person, for retail. So, Michael is an OG, and I fully trust where he's driving the company. I just don't understand why you wouldn't share the address and let people track the address and let people spin up websites that tracks each and every movement of the address. It gains more attention. It offers more transparency, and that seems to be what MicroStrategy is all about. So the only justification I have for it is that it's probably has something to do with some weird insurance clause that would force MicroStrategy to pay a higher premium for the insurances that they currently hold. And with MicroStrategy lacking cash flow, there's no reason to increase your expenses. I mean, that's if I had a choice, share my pub key or save money on my insurance premium, I would say save money on my insurance premium because every dollar I save is another dollar I can stack Bitcoin with. So I that's just my theory. I have no reason to believe that that's the truth. It's just from my brain. It's the only thing I can think of that would like really justify that response. But yeah, out of all the things Michael has done and said, that one definitely didn't make a lot of sense to me.
Yeah, that's interesting, and great take on one. Obviously, mind reading a little bit and just wondering and game planning this out. Yeah, it was a little head scratching, just to say the least.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
You did mention, we just talked about Saylor. We've been talking about Bitcoin corporate treasury strategies. The Pandora's box is open. Now, it's very interesting because some Bitcoiners out there are like, this is going to blow up. Other Bitcoiners are essentially saying, this is a speculative attack on the dollar. These Bitcoin treasury companies are going to be the ones that save the companies that don't own Bitcoin. So maybe this is a two-part question, CJ, but I guess the first part of the question is Bitcoin Treasury Strategy a good strategy? And then to kind of wrap it up, like, what could go wrong with this strategy?
Yeah, those are fantastic questions. And I think it is a good strategy as long as you get access to cheap debt. So I think some people are looking at debt as a liability, and other people are looking at debt as an asset. So this comes back to how deep of a dive have you taken into monetary history and the difference between real and nominal interest rates, and how many people are actually managing wealth and understand how to protect that wealth in terms of purchasing power, right? So if you're only worried about the nominal number on the screen, then yeah, I mean, it could be a problem if you add debt on your balance sheet, and it can absolutely be considered a liability. I mean, it goes in the liability column, but the real fact of the matter is that when you're able to borrow money at an interest rate that is lower than the rate of inflation, you're actually getting paid to borrow in terms of purchasing power. So even if you're borrowing that money and spending it on goods and services, and those goods and services, the prices of those goods and services are increasing at a rate that is greater than the rate at which you're borrowing, you're getting more goods and services today than you would if you waited to buy tomorrow. So you pull forward your purchasing power and turn that purchasing power into a real world asset that outpaces the growth of the debt itself. And then it actually turns the debt into an asset, not a liability. Now, when you incorporate Bitcoin into that mechanism, it's a whole new story because the 5-year compounding annual growth rate on Bitcoin is over 60%. And people don't realize this, but 60% CAGR over 5 years, that's 10x. So if you have $100,000 in Bitcoin and it keeps its 60% CAGR rate in 5 years in 2030, your 100,000 is going to be worth $1 million. And the 10-year CAGR on Bitcoin is over 80%. I don't even know the math off the top of my head on what that would be. Like it's absolutely crazy how good Bitcoin is working as an engineered money, how good Bitcoin stores value and grows it and preserves it through space and time as these fake fiat dollars are continuously and aggressively diluted by the powers that be. So I think it is a sustainable strategy because you're adding debt to your balance sheet, which does create a liability technically, but because you're pulling that purchasing power forward and putting it into an engineered money that is the best performing asset class in the world because it was engineered to perform that way. It's savings technology. The growth of that savings technology, the growth in the value of that savings technology so far outpaces your debt burden that it's really not a liability. The liability closes itself, which is why we've referred to the Bitcoin-powered mortgage as a self-repaying mortgage. Because if you're willing to sell your Bitcoin at the end of the life of the loan, the Bitcoin can actually just be so like what you posted as collateral will have grown in value so much that you could just sell a small portion of the collateral to close the loan. And then your out-of-pocket burden is zero because the collateral itself actually closes the liability. And that's what I think the traditional analysts are missing with the Bitcoin Treasury Company strategy, that they're just missing that Bitcoin yield. Like this comes back to like redefining yield. When people hear yield, they should be concerned. And that's because most yield that we've seen in crypto was created through inflation, right? It's just tokenized fiat. So you print the tokens, you give them to stakers, they sell them into the market. There's an infinite supply, and that is printed yield. That's not earned yield, so it dilutes. But in Bitcoin, you actually earn yield because there's no more Bitcoin being created, but there are a crap ton more dollars being created. So as the value of Bitcoin goes up over time, that liability closes and shrinks on itself. And the traditional analysts, they don't understand that. So when they look at this, they're bewildered. And that goes back into our first segment because they look at this and it doesn't make sense. It doesn't jive with traditional finance. So they say, I want to get short. These guys are going to get, and I do think there is some risk for the copycats, right? So like Michael Saylor is the innovator. He's always going to be the innovator. And people are going to copy him because copycats really don't innovate. So and I think Dylan LeClaire is another innovator as well. I think he's doing a fantastic job at Metaplanet. They've used different types of instruments to raise liquidity. So I'm taking notes on Michael Saylor. I'm taking notes on Dylan LeClaire, and I think that those two guys are actually innovating. And I think a lot of the other companies are just copying what they're doing because it is a good strategy. The math does work out when you run the numbers. And I think Bitcoin accumulation is never going to hurt your balance sheet in the long term. How can it when it's going to 10x your balance sheet in 5 years and 15 or 20x your balance sheet in 10 years? Like that is a strong strategy. What I would be concerned about is that companies who start copycatting, it's exactly what the central bank did when we wanted to sell more treasuries. We raised interest rates. So, Michael Saylor is going to be able to continue to issue debt at almost 0%. He's going to be able to continue to financially innovate and offer preferred offerings and different types of financial vehicles that solve different problems for different pools of liquidity in the space. And he's going to be able to sell and raise liquidity through those methods. Copycats aren't going to be able to do that. So how are they going to attract demand to their debt? They're going to increase the interest rate. And then as that interest rate increases, there will come a natural equilibrium between the point where, hey, this is the maximum we can borrow at this interest rate, because with the volatility of Bitcoin, at any one time, we need to make sure that we can liquidate the Bitcoin to cover the debt. And I think some of these copycats are going to abuse that understanding and are going to get into a place where the asset can get to a point where it's less than liabilities, right? I think Michael Saylor would have to, with all the debt that Michael Saylor has, Bitcoin would have to go down like $2,000 or something for his company to be upside down. I think what Metaplanet just did with Dylan LeClaire, they had a 555 million Bitcoin plan, and they raised like 517 million in one day. and then they matured like 200 and something million dollars of 0% bonds, and now their asset to debt ratio is like nothing. They literally have they statistically speaking, they basically hold no debt against the clean asset side of their balance sheet. So now they're cleared again to start raising liabilities and then over time paying those down and reducing liabilities. So when you're talking about assets outpacing liabilities and then paying down liabilities like we've seen Dylan do and Michael will do either through raising new capital or eventually selling some of the Bitcoin. I doubt he'll have to sell any Bitcoin, but if he does, he has plenty of liquidity in order to do that. That's where I think like the real successful model comes from. I think the copycats are going to get in trouble because they're going to say, well, we'll issue debt at 3% and 4% and 5% and 6% and 7% and 10%. And they'll just keep going and going and going to attract demand on that debt by raising the interest rate. But eventually, Bitcoin will have one of those liquidity moments, right? It's like, it's not Bitcoin, it's the human variable. Like, just like the human variable creates the euphoria phase, it also creates the maximum fear phase. Going into the war was a perfect example. Bitcoin was like 104, 105. Bombs went off, went under 100. Ceasefires announced. Now we're back up over 107. So it's the human variable that is going to produce this at some point in time extreme fear moment. And during that extreme fear moment, if a company racked up too many liabilities and those liabilities are now greater than the asset side of their balance sheet, the company is going to be upside down and it could be forced liquidated. And that's the biggest risk for a Bitcoin treasury company. And Opti, just one more thing I'd love to add into the mix here, because not a lot of people know this, but People's Reserve is actually working on a reverse merger with a special purpose acquisition company. And we want to be a Bitcoin treasury company, but we have a different mission. Our Bitcoin treasury company wants to be the first Bitcoin treasury company to pay a dividend. And that's because I hold my Bitcoin for the long term, but I want to hold an equity that gives me long-term Bitcoin upside exposure of a future central bank of the internet economy, but also gives me cash flow dividends to take care of my life today, right now, so that I don't have to sell Bitcoin or put my Bitcoin up on margin and borrow against it and not sleep that well at night, trying to get my purchasing power without giving up ownership of the asset. So at People's Reserve, we're really excited because we've built an ecosystem that actually creates fees and revenues powered by Bitcoin-powered finance. So we have financial engineering for the everyday person, financial engineering for retail, like through our Bitcoin-powered mortgage product. And then when we pool money from both the decentralized digital economy and the U.S. capital market, we take that liquidity, we put a little bit of Bitcoin on our balance sheet, but we take the majority of that liquidity and we plug it into our ecosystem. And now we lend money to Bitcoiners. We lend money to the risk-free borrowers in the marketplace. So imagine Michael does a $100 million sale. He takes $20 million and puts Bitcoin in his balance sheet, but he takes $80 million and puts it into a fund and then uses that fund to then lend to Bitcoiners and empower Bitcoiners through Bitcoin-powered financial products. So with that model, we're really excited because we'll be able to tap into DeFi, tap into U.S. capital markets, provide liquidity at zero cost of capital, which then gives us the ability to redefine the risk-free rate and borrow in the marketplace. And all the fees and revenues generated in that ecosystem pass back up to the parent company and we can distribute dividends. And I don't want to just distribute dividends according to traditional methodology. I want to rewire and rewrite how companies pay dividends. I don't want to be an Apple who's sitting on hundreds of billions of dollars of cash. If a person invests in your company and owns equity in your company, they're here to make money with you, not to just hope the stock price goes up. So at People's Reserve, we're really excited to see Bitcoin treasury companies being led by real Bitcoiners who have strong strategy and understanding, like Saylor and like Dylan. And then hopefully even like People's Reserve, with yours truly at the helm, combining DeFi with U.S. capital markets to produce liquidity to Bitcoiners that is not attached to the traditional yield curve, and then creates a dividend for equity holders as they wait for People's Reserve and Metaplanet and Strategy to turn into the central banks of the digital economy.
Love it. So just going back to the Sailor question a little bit, it sounds, and maybe this is a unfair characteristic, but just to generalize here, it sounds like you said that the infinite money glitch window might close, but the Bitcoin treasury strategy, just holding Bitcoin as your company treasury, that will be good forever. Is that a fair way to characterize this?
Yeah, I think that window is going to close on the lower, less established Bitcoin treasury companies. Companies that don't have a real Bitcoiner at the helm that's communicating with the Bitcoin community. They're going to just raise their interest rates, and at some point in time during that point of maximum fear, liabilities will be greater than assets, and that will force liquidation. So I think the cornerstones of the marketplace, like the meta planets and micro strategies, are here to stay. They have nothing to worry about, but the copycats are where the real risk enters the market. But ultimately, long term, holding Bitcoin in your balance sheet is only a net positive.
Yeah, 100%. Okay.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally have not only an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you. Check out Ledn.io today.
I do want to pivot the conversation because you did earlier touch on the idea of the monetization of Bitcoin. And I think you might be one of the only persons that I ever really talked through this, how this actually happens. And I know a lot of Bitcoiners, especially since the BlackRocks of the world came in, the nation states of the world came in, they're starting to feel like, is this Bitcoin project going awry? Like, are we losing our Bitcoin ethos? So could you talk about how the monetization of Bitcoin happens in your mind? And then maybe to, again, put a little pin on it, is Bitcoin losing its ethos while it becomes financialized?
Yeah, I love that question because this is the heart of our mission at People's Reserve. And not only are we here to unlock your purchasing power without you giving up ownership of the most valuable asset on your balance sheet, we're also here to establish a free market yield curve. So, what do I mean by that? What does monetization and financialization mean, and how does it play into what's happening in the marketplace right now? And I think this is such an important concept. Most Bitcoiners, they know that we need fix the money, fix the world, right? If you fix the money, you fix the world. But you can't have free market money when there's a centralized entity that is naming the price of the money. It doesn't work that way. So this is not just a monetary revolution, it's a financial revolution. We don't just need to fix the money, we need to fix free market interest rates on the money. Could you imagine a world where Bitcoin is trading for $10 million, but then there's a centralized entity that tells you the interest rate that you have to borrow against your Bitcoin? That doesn't make sense. That's not true free market. So, yeah, I think we are coming to a fork in the road, and the marketplace has to decide, okay, are we going to embrace fractional reserve banking? Are we going to empower the fractional reserve bankers to expand currency units at an infinite rate and to earn interest off of those currency units so that we can access our Bitcoin? Or are we going to go back to the free banking era? Are we going to go back to a time where no entity had the ability to just print money? So where did the money come from? Like, I'd love to pose that question to your community, and I think those who have studied financial history, they know the answer right away. But for some of them, it might not be clear. That before fractional reserve banking, there was no way to just print money out of thin air. A community of people who delivered value to the economy and spent less than they saved, aggregated their savings together, which became known as like a community bank, and then told the community bank, look, it's your job to vet borrowers and to lend out this money with fiscal responsibility so that my savings can earn an interest. That's how it worked. So the money itself was not printed out of thin air and just lent to you. It was actually aggregated from the community itself. And when you aggregate that liquidity, you then re-lend it out to borrowers. And then the savers earn the interest from the borrowers. And it was the bank's job to say, well, you're a valid borrower because this is a good business idea and you have a good credit score. And you're not a valid borrower because you have no credit history and that's a stupid business idea, right? So it was an idea of actual having to be financially responsible and not having the ability to just print money out of thin air. And that's why we have all the zombie companies we have today. So we have zombie companies today because we have businesses that actually don't produce that much value. The goods and services that they produce they deliver very little, if any, amount of value to the economy. And therefore, they only have the ability to pay off their debt. They can't close that debt. They got to keep rolling it and rolling it and rolling it and making interest payments on it and just making that minimum payment, hoping that sometime in the future they're going to create a good or service that actually delivers massive value. And then when you create a good or service that delivers massive value, people vote with their money, right? It's probably the only vote we have left that actually counts. We can vote with our money. And when you vote with your money, the price goes up. And when the price goes up, the producer's cost doesn't go up. The profit goes up. And as profit goes up, the producer expands the supply. The marginal cost of production goes down. Profit grows even more. And it finds a new equilibrium at a new price point based on the value proposition of that good or service. This is free market economics. This is the free market price signal. This is what Bitcoin is all about. Bitcoin is not about fractional reserve banking. Bitcoin is not about infinite money glitches. Bitcoin is about working hard, being honest, spending less and saving more, and delivering value to the economy. That's what Bitcoin is about. So I do think we're at a crossroads here, and Bitcoiners need to make a decision. They need to say, wait a second, are we going to embrace the fractional reserve model, or are we going to demand? Are we going to opt out of the fractional reserve model and opt in to a new free market economy? And I think the domain for that economy is actually the digital economy. This is why Michael Saylor wrote the digital asset framework. It's a world where all assets are tokenized, but they're priced in sats and settled on Bitcoin because nothing else is trustworthy to be the settlement layer. Anything that tries to be the settlement layer is a scam. Bitcoin is the only secure settlement layer. It is the only secure asset to price anything in, and everything is already being repriced in Bitcoin. So we need to make a decision. Do we want to embrace fractional reserve banking, stated interest rates, anchored interest rates, the TradFi yield curve, or do we want to detach from that system, go back to true free market economics, put all of our liquidity, put all of our value and savings into the digital economy and embrace an ecosystem that says, you know what? We're not going to print thin money out of air. We're going to pool liquidity from where we can, and we're going to supply it to Bitcoiners, and we're going to empower Bitcoiners with the financial tools that you need without embracing fractional reserves, without empowering those people who control the price of our money and letting them earn interest from us. Let us provide the liquidity and earn interest from ourselves. We are at that crossroads right now, and we need to make a decision on whether or not we want to empower the people who are enslaving us or to empower ourselves. Because you can't go crawling to the cantillionaires asking for a 7% credit line and then turning around and saying, why are these companies lending to me at 13% and 16%? I want to borrow against my Bitcoin. I got to pay 12%. Make it make sense. Yeah, because you think the cantillionaires are here to empower you. You think those people are here to create value for you. They're here to extract value from here. They're here to take your time and energy. They're here to make you a debt slave. So of course you can't go crawling back to the TradFi yield curve and cantillionaires asking them to re-understand Bitcoin and treat it as pristine collateral, make us the risk-free borrower. We need an alternative ecosystem. We need an alternative method that embrace free market finance and free market economics. And then we can redefine the risk-free borrower. Because if you go crawling back to the yield curve, begging for a credit line at 7%, what do you think Bitcoin companies are going to have to do? They can't borrow from the cantillionaires at 7% and turn around and lend you money at 5%. The business dies on day one. You need to source liquidity like Michael Saylor does with zero cost of capital. And when you have Bitcoin on your balance sheet, you're able to do that because you're financializing the compounding annual growth rate of Bitcoin, and you're financializing the volatility of the Bitcoin marketplace to source liquidity, because that's what's starved in the traditional system. The traditional system isn't dying only because it's fractional reserve. It's also dying because the vast expansion of currency units that are out of control, empowered by the fractional reserves. There is a system that you could have fractional reserves and have no inflation. You could even have a fractional reserve system and have deflation. But in what world is that going to happen? Doing the same thing and expecting different results is the definition of insanity. So we cannot continue to do the same thing. We need to understand that the human variable, especially with government involved, is always going to abuse the system, is never going to be responsible. There's no historical precedent for it going all the way back to the times of ancient Egypt. There's no historical perspective of this working. So we need to drop that methodology, drop this understanding of monetization and financialization means embracing fractional reserves. No, it doesn't. There's a different way. There are different ecosystems. We need to turn our back on fractional reserves and get back to free market finance, free market banking, free market economics. And this is just as important. A lot of the guys are the circular Bitcoin guys, right? Like, you want to spend your Bitcoin circular. I agree with you. I wholeheartedly agree with you at the top of the S curve. After all that fiat wealth has transferred into Bitcoin, and now all of that value has transferred out of the fake fiat world onto your balance sheet, and now the price of Bitcoin isn't pending a huge transfer of wealth, but is instead tied to the expansion and contraction of the global economy. Now you spend your Bitcoin. But right now, on the precipice of financialization, on the precipice of the largest transfer of wealth in human history, you don't spend your Bitcoin. So that's what makes this so hard. There's multiple prongs, there's multiple angles, and we need to pick and choose our spots. But I think Bitcoiners now need to understand we are fast approaching that fork in the road. It's time to turn our back on fractional reserves and take advantage of ecosystems that offer financial tools that empower us to unlock the purchasing power of our savings without giving up ownership, without having to worry about liquidation, so that we can increase our quality of life and standard of living. And that's one thing that this digital economy is going to do. The digital economy that we see in Saylor's framework, it's going to empower you. It's going to deliver value to you. And that's going to increase everybody's quality of life. Even if you don't embrace Bitcoin, it's still going to increase your quality of life. We're at the climax of fiat. It's not only just the money system breaking down, it's society itself. Did you see who won the thing in New York? The
Yeah,
guy
I did.
come out and say, he literally has like a TikTok video that is like, if I'm the mayor of New York, then the government is going to buy grocery stores. We're going to take our taxes and fund the grocery
Incredible.
stores, and they won't be profit driven. They won't have to pay taxes, and we'll pass those savings on to you. That means you never took an economics course in your life, or if you did, you only took the TradFi economics courses, and you only have the Keynesian brainwashing, right? It's probably one of the dumbest ideas in the history of humanity, and it's not a new idea. It's one of the oldest ideas under the sun. And for the reasons I explained earlier with the free market price signal, that's why capitalism wins. Because in socialism, when the grocery store starts stating the price instead of the vote of our money stating the price, filet mignon disappears. And those big fatty pieces with no meat on them that are super chewy, they just take over because that makes more sense. We can sell those for cheaper. Yeah, but nobody wants to buy those because nobody wants to eat those. You have to let people vote with their money and let the free market price signal dictate what supply should increase and what supply should disappear. But these are the people who are coming to power. Other people are voting for these people. We cannot keep embracing this system. It's time to turn our back. We're at the fork in the road. Make your decision, Bitcoiners.
Absolutely love it. And it really begs the question while you were going. There was a few kind of angles that I might take this. Recently, one of the big hot topics around Washington, D.C., and of course, Bitcoin or digital assets, as they like to talk about, is regulations. And as we've seen in the last year or so, politicians, or rather politics, has landed on our doors. So I don't think I've actually asked you this question in person yet, or even on air. What is your idea, or rather, what is your take on Bitcoiners kind of, lobbying politicians here? Is this a good thing? Is this a bad thing? Was this an inevitable step that we knew we were eventually going to get to? Like, what's your take on all that, considering what you've just kind of laid out in the last 45 minutes?
Yeah, I think it's of the utmost importance because it's this is the source of decision making. And at the lower local level, a lot of politicians that I've met and worked with in Florida here are fantastic. I mean, they're smart, they're witty, they're patriots, they're constitutionalists, they believe in free markets, and they have it together. So I don't know what something gets lost in translation when you move from the local level and go to the federal level. Like I would say that I'm like a Thomas Jefferson guy, where I don't think we should have federalism. I think the states really should govern themselves, and there should be a very limited uh, role for federal government, if any at all. I mean, I'm sure there's some things that need to be federalized, but we need to find a way to get back to the local level because I've talked to local level politicians in many different states, especially for People's Reserve and the different things that we're trying to do. And a lot of them have been smart, easy to talk to, and very few of them have, like you would think, like, you don't "Hey, don't trust a politician." I think a lot of the lower level politicians are actually trustworthy. What happens is when you get up to those higher levels, they gotta play that politics game. And at the higher levels, those people are just not I mean, it's like you can count on one hand who you can actually really trust at those really, really high levels. I think Senator Loomis is a really good example of somebody you can trust at a really high level, right? Like, she's at the highest level that you can be, and she's putting out Bitcoin legislation. She's helping educate people on Bitcoin and why Bitcoin is important as money, and nothing else can compete with Bitcoin, and nothing else stands up to Bitcoin. I mean, if those people weren't doing that great work, who knows? Maybe it wouldn't have been a Bitcoin strategic reserve, and that would have been a crypto strategic reserve. It seemed like it was going to be like that for a little bit there. So having those trusted voices at those higher spots is so important. But I think the sad fact is that we've fallen so far because of fiat that most of them can't be trusted, right? Most of them are like, I'm not even going to name names. I'm not going to do this. I'm not going to create my own enemies. But everybody knows it. Everybody's open and honest about it. Bitcoiners need to vote with their money. And one of the ways that you can vote with your money is lobbying. And it's so important to let these politicians know, "Hey, we support you because you support this." And so that they know, "Hey, somebody is supporting me because I'm standing up for this. Why are they standing up for this?" And then they start to learn more about it, and the lower level politicians are open to it. One really cool thing that we're doing at People's Reserve is we're lobbying politicians in order to try to figure out how to create a home share program. Now, many people might be familiar with what they call health share, and health share is like a type of health insurance, but it's not insurance. So there's actually like a legal definition. There are laws that allow groups of people to pool their money together to have health share, not health insurance, and they pool that money together to take to share the burden of health cost in that pool of people, and that's now a legal thing. That's a service that can be entered into, and that is fully regulated and legal here in the United States. Well, at People's Reserve, obviously, we it's exciting that we have a health share program lined up, and we're gonna take all of the premiums paid into the health share and put it into a Bitcoin bond. So in other words, Bitcoin's performance, Bitcoin's engineered design is going to empower you to get the same type of health protection for pennies on the dollar because of the underlying performance of the Bitcoin bonds that back the program itself. But we're also heavy into real estate, right? So what about home share? But there is no law for this. There is no regulation for this. You can't just start this business. You can't just say, "Oh, we own a home in Florida and the insurers don't want to insure us because of all the hurricanes that are coming. So now we have to self-insure," which is almost impossible for most people at this point in time in the fiat game. And if a hurricane comes, you lose your home. If a hurricane comes, there's nothing you can do. You have to sell your property in a foreclosure, or if you own it outright, sell it for pennies on the dollar because the new person has to come in and knock everything down and start over from scratch. Well, there should be a home share program. If you can pull together liquidity and share the burden of health costs in a pool of capital, then you should be able to do that with home share. But we need politicians to pass laws. And the only way to get them to pass those laws is to lobby them. And a lot of lobbying, let me be clear what lobbying is. Lobbying isn't with money. Lobbying is actually with time and education. That's what lobbying is. Giving the money gets you their time. But once you have their time, if you don't have the ability to educate, if you don't have the ability to explain what the problem is and how they can help solve it, nothing comes from it. So we need Bitcoiners to continue to step up, continue to support movements. And what I'd really like to see actually is an orange party. I think, that's enough elephants and enough donkeys. We don't need any more of those. Let's get an orange party. We really need a group of people that are like Bitcoiners, that want to deliver value to people rather than extract value, that deliver value to the economy and build businesses rather than just clock in and clock out. We need people who want to actually do these things. And I've never met one person who's not a Bitcoiner who wants to do these things. And the best politicians that we have in the existing system are all Bitcoiners. So we really need it. I think it's a great time where we are on the political spectrum. It's a great time to say, hey, let's make an orange party. Let's see who really is a Bitcoiner and who really does want to fix the money and fix the world. And if not now, then when? And if not us, then who? It's time. And I think it's important. You can't ignore the system, right? If you ignore the system, people like this guy in New York are going to sprout up so fast. It won't be long until New York looks like France. And then it's going to spread to other states. So we need to step up now to educate. We need to step up now to make sure that these things don't happen, because it's already happening on their side. They're creating, like if we have the orange party, then they have like the poison apple party, for lack of a better way to put it. And the poison apple party is moving ahead, full steam ahead. The poison apple party is already cutting up the poison apples and handing it out to people. Like, we need to get our oranges together. We need to get some of these oranges peeled and let people taste the goodness of this fruit and what can happen when you embrace Bitcoin and free money and you apply proper economics to monetary fiscal policies. We need to do it now. And if we don't, we're going to get left behind. And at some point in time, it's going to be too late. So a little bit of a tangent there, a little bit of a rant, but I think it's such an important question, Opti. We need an orange party.
Yeah, orange party, and the mascot is a honey badger. No more elephants and donkeys. It's the honey badger. Love it.
That's right.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
Okay, CJ, we are getting close to the top of the hour, and I do want to hit on one of the things that when the first time you kind of explained this to me, it absolutely blew my mind. And I've really only seen you and Capriol Investments that talk about this. And this is like one of your main messages that you hit on constantly. It's the idea of the fair value of Bitcoin, the cost production of Bitcoin. So again, we're at the top of the hour, but I think this is a valuable lesson just to kind of put a bow on this conversation today. So first of all, what is the fair value? What is the fair value for Bitcoin? Like, what is that idea about? And then just kind of, full circle from the beginning of the show to where we are now. What is the current fair value price of Bitcoin?
Beautiful. So the first thing I want to do is I have to shout out Charles Capriol, because imitation is the ultimate form of flattery. And within the Bitcoin fair value algorithm, we've taken a lot of what we learned from Charles and his algorithms and kind of created our own understanding and our own model. So it wouldn't be fair for me to speak about Bitcoin fair value without giving Charles a shout out and just thanking him for the free time and energy that he put into producing those and sharing them with the community and writing blogs about it to help people understand what's really going on here. So shout out to Charles. Thank you so much. And I think I still use his indicators like every day. So I use Charles Bitcoin cost of production and Bitcoin energy value. Cost of production and energy value are two, and he actually shares these on TradingView. You can actually pull them up on TradingView and see them on the chart, get them plugged into your Bitcoin chart. And these are fantastic. These are fantastic models. You can also go to his website, Capriol. I think it's capriol.com/charts. Just make sure it's the one with the horse and don't get fished or anything. But yeah, he shares that updated chart because the TradingView metrics don't update that often. He has to continue to go in and update the Pine script. I'm sure he's a very busy guy, so those models lag behind the ones that you can find on his website. But with that understanding, what we know is a really important metric to free market price discovery, right? So we talked about free market price discovery earlier, where people vote with their dollars. What happens if people stop buying stuff? Then the producer of that good or service has to lower the price, because a lower price increases demand. And they're going to lower that price until finally they get to the break-even point, where if a person paid, this thing cost me $5 to produce. If the person pays $5 for this, I'm just getting my money back. I'm not making any money. That's what I refer to as fair value. Fair value is a price that somebody can buy a good or service, and that doesn't mean it's actually fair. It could be argued that fair value is actually, there's a little bit of profit baked into fair value because the producer has to make money. What's this guy supposed to create a good or service for you and make no money? That's not really that fair. So there could be a flaw in my naming tactics here, but whatever. The point is that there is a fair value to every good and services. This is not communism, right? This is not the New York mayor style economics. This is not the labor theory of value. This is how business works. If you run a business and you sell your good or service for less than it costs, you're going to go out of business. So just in case you didn't understand that, now you know, right? You can't produce a good or service and then charge less than what it costs you to produce a good and service. You'd be a really bad. You should probably just sell the business or close the business and go get a job and start clocking in and clocking out, because at least you'll make some money, right? So you have to make profit. So fair value is a really important concept, because when people vote with their money and that good or service delivers a strong value proposition. And by the way, Bitcoin's value proposition is truth money in a world of lies. So there is not a better value proposition in the world than a truth ledger when the rest of the world is stuck on a fake ledger. So the value proposition is infinite, really. It's infinity divided by 21 million. And for us to discover this fair value price through time, you can't just go from 0 to infinity. You can't just go from 100,000 to a million or 100,000 to 10 million. Over time, that fair value is discovered. And as Bitcoin grows, it becomes more and more valuable. But what is the underlying driver? Why are we getting higher lows over time? Why don't we get lower lows and lower lows and then higher highs? Why isn't it volatile like a tulip bubble or like the dot-com bubble and go back down to zero? And what's going on here? How is this happening? Well, this comes back to free market price discovery. And the price of Bitcoin continuously goes up because the fair value is driven up by its engineered design. We have, number one, absolute digital scarcity. There's 21 million Bitcoin. There'll never be any more. Interesting little side note here. Halfin once said that calculating the market cap of Bitcoin, he used 20 million Bitcoin. Interesting. How would he know 1 million Bitcoin would be locked up forever? Why wouldn't he use 21 million? Why would he use 20 million? Interesting rabbit hole there. But he said that to calculate this value, we have to figure out how much energy goes into this, because the energy is the cost. And he understood that when a miner comes to the market, they're going to ask for a price above the cost. Now, isn't it funny that when markets trade, there's a bid and there's an ask? Well, who's doing the asking and who's doing the bidding? The producer is doing the asking, right? When you go into a grocery store, it doesn't say, there's not an auctioneer on every single item asking you what you're willing to pay for the good or service. There's a price, and that price is set by the producer, and the producer looks at their cost and creates a profit margin and then asks for the price. And people see the price and say, yeah, you know what? I get value from this good or service. I'm going to buy it. Or you know what? I don't get value. I'm not going to buy it. So then the producer issues a coupon. Hey, 2 for 1, BOGO, right? Who doesn't love a BOGO? So it lowers the price and it gets you to buy, right? And in grocery stores and food, that's important because food expires and stuff. But with goods and services like Bitcoin, Bitcoin doesn't expire. Bitcoin's good. So what happens is absolute digital scarcity, and next we have the halving. Every 210,000 blocks, the amount of Bitcoin issued per block in that block subsidy is is cut in half. And what most people don't understand is when that block subsidy is cut in half, the cost of production doubles for the producer. So, I learned this the hard way. The halving came, I'm super excited, right? I'm like, this puppy's gonna fly, baby, it's halving time. And then I'm like, well, wait a second. I didn't think this one through. I'm still paying the same amount for my land, labor, and materials and electric. And now I'm only getting half the Bitcoin when I hit a block? Wait a second. What kind of scam is this? Like your cost of production doubles overnight. And on top of it, every 2016 blocks, we have the difficulty adjustment. Right? So when you're ordering your brand new miners from Bitmain and you're running the numbers and you're like, "Oh, baby, I'm going to be rich. We're scaling this puppy out. I'm buying as many machines as I can possibly buy. Call out the electric company, spin up another volt. We're going to plug in, build a waterfall. I want hydro. We're going to we're going to be billionaires." But by the time those machines actually land in your driveway and are ready to be plugged in, that hash rate lands in everybody else's driveway too. And when all of that hash rate hits the network and blocks are found at a faster than a 10-minute pace, every 2016 blocks, the difficulty adjustment would adjust up. Now, if the network shrinks, right? We had a heat wave recently, which interestingly aligned with the bombing on Iran, but it really was a heat wave that led to the shutdown of the machines and a lowering in hash rate. So when hash rate goes down and blocks take longer than 10 minutes to find, the difficulty will go down, decreasing your cost of production. So difficulty is amazing. Difficulty adjustment is like the central bank of Bitcoin. If the economy gets too hot, the central bank raises interest rates to slow her down. The economy gets too cold, they'll lower interest rates to heat it up. Well, if the hash rate goes too far too fast, difficulty increases to slow it down. If the hash rate drops too fast, difficulty will decrease, making it more profitable, allowing that hash rate to come back online. It's a self-sustaining mechanism that protects to the downside by creating additional profits by lowering difficulty, allowing hash rate to build back up and become more profitable. But it drives value at the same time because when the difficulty increases, it increases the cost of production, which increases the fair value because the earner of the subsidy wants to take the aggregate cost of production, not just the electric cost, right? I think a lot of miners love to share their electric cost. Hey, it only costs us $40,000, $50,000 of electric to mine a Bitcoin, and we can sell it for 107. We're doing great. Okay, then why is your stock price at all-time lows? Because your all-in cost of production, when you take into account CapEx and OpEx, land, labor, materials, the new $500 million facility that you just built, the cost of production per Bitcoin is much more than just your electrical cost. So the all-in cost of production creates that fair value, and miners must ask for a price above that value if they wish to remain profitable. And an interesting dynamic with the advent of publicly traded miners, they also have the ability to use the ATM and dilute their shares to raise capital in order to cover some of those costs, right? Because they believe in the long term of Bitcoin. So not all miners are forced sellers of Bitcoin. If you have access to U.S. capital markets, you have a huge advantage. This is one of the reasons why I got out of mining, because I didn't have a mining facility that was publicly traded. I didn't have access to U.S. capital markets. I didn't have a way to compete because I was a forced seller of Bitcoin because I had to cover my costs. So there is that added dynamic there. But with that understanding, people should know this is why I call Bitcoin engineered money. It has been strategically designed through absolute digital scarcity, through the halving, and through the difficulty adjustment to drive value into the asset. And then through the other characteristics to maintain that value. And then through the dilution of the dollar to grow that value and to maintain purchasing power through space and time. That's the whole concept of Bitcoin fair value wrapped in its economic shell. And right now, today, I believe last time I checked, Charles Capriel's all-in cost of production was around 115. Fact check me on this by going to his website, comment on his X account, tell him thank you for all the work he does. But I have Bitcoin fair value, which takes into account a couple different variables, including volume, including turnover, including some more like monetary characteristics rather than just pure cost. So we integrate some monetary characteristics into the algorithm, including velocity and settlement. So getting all of those pieced together, I have Bitcoin fair value today at $320,000. So we are at a massive discount to fair value. And I will say this, there's no promise that the future will work like the past, right? Past performance doesn't guarantee future performance. However, in 13 years of backtesting, there has not been one Bitcoin bull market that has ended with the price below Bitcoin fair value. Not one time. Every single time the spot price of Bitcoin was above Bitcoin fair value when the bull market ended. So right now, I think, again, we're flipping this psychological resistance into psychological support. People are going to get really excited as we start going to new all-time highs. We will move in eventually. The human variable will move us into that euphoria phase. Euphoria will push price above fair value, somewhere above that $320,000 mark, which, by the way, it can shrink and grow with the network, right? If hash rate continues to grow, fair value will go up. If hash rate shrinks, fair value will come down. But still, it's at 320,000. So I think this bull market ends somewhere above 320,000. And if we're being monetized as digital gold, parity with gold is around $1 million. And then what happens when everybody else starts paying attention when Bitcoin passes the price of a single family home? I think the average price of a single family home is like $400 and something thousand. Well, what happens when somebody realizes, wait a second, I have to work 30 years. I have to work the rest of my career to buy my home. Now I have to work even harder and longer to buy one Bitcoin? What is really going on here? And I think the next big wave of Bitcoin buyers are actually going to be current homeowners who transform their home equity into Bitcoin equity. Because for the vast majority of Americans, the main source of their wealth is in their home equity. And your home equity, depending on your zip code, is growing at 2 to 8% CAGR. And by the way, a home is just like a vehicle. It devalues over time, especially if you don't take care of it. So you need to get the most important source of wealth transferred from your home equity, and you need to get it into Bitcoin equity, into a deflationary asset that gains value over time through its engineered design as savings technology. And you need to get it out of your home equity, which is just being diluted and diluted and diluted and creating a net negative on your balance sheet, becoming a liability more so than an asset on your balance sheet. So the next big wave of buyers, I think, comes from homeowners who transform home equity to Bitcoin equity, but that's not going to happen until the price of Bitcoin's above a single family home. But I think it can get above a single family home because we're being monetized as digital gold, and that means $1 million. So those are the price points that I'm watching. Fair value at 320, single family home at the 400 range, and then gold parity at $1 million. Anything beyond that, I think is just, I don't have enough time to think about anything beyond that. But in the long run, I think we go way beyond that. And that's because we're going up this S-curve of adoption, and we're just now accelerating. We're nowhere near adoption. People are still laughing at it. But, our kids and our grandkids, they'll be at the top of the S-curve, and they'll be able to benefit from all the responsible saving of Bitcoin that you and I did. So hopefully we get a nice little picture that stays in the house so they can remember.
An oil painting, right? An oil painting.
Nice little oil paint. Not
All right,
AI.
well,
not AI. Real oil
not
painting.
AI, oil painting. All right, CJ, I think that's a great place to end this convo today, man. Really appreciate it. And guys, I really hope you learned something today. Again, as I started this interview, CJ is one of my favorite thinkers. You're definitely, as you can tell throughout this process, you're really thinking about this much more than just, number goes up. So CJ, thank you so much. And the viewers, guys, of course, drop a comment on the video. Let us know what you think about this. Hit the like button. And of course, subscribe to Simply Bitcoin. CJ, thank you so much. We will catch you on the other side.
Thanks, Opti. See you next time.